Move on and let's get back to the equity markets then. And firstly, let's try to understand the trade setup for today. And let me welcome two of our techies then. And Nooresh Mirani as well as Kunal Bothra is joining us on the show. A very good morning, gentlemen. And Kunal, I'm coming to you first to have your take on the benchmark indices because yesterday there was indeed a recovery attempt, but we did close the day below that 24,000 mark. How do you see this weakness? And even the GIFT Nifty is also indicating some bit of a more weakness from these levels. So what should be the strategy today?
Good morning. So I believe that after yesterday's sharp gap down and the follow-up selling which happened for the indices post that, I would probably expect the index to remain into a drift on the downside. But then I don't expect a major correction as such unless the factors across the globe they start to deteriorate significantly. I think one of the major factors which impacts the trends for equity markets is dollar index, which is now almost at 108.4, 108.45 levels. So that I think could probably keep the markets on tender hooks. And I also believe that if we sustain just around that 24,000 mark, say for the next couple of days, and assuming the data points across the globe does not deteriorate, then I believe that there could be a chance of a stock-specific recovery. So I think right now, it's all about having a mixed kind of a strategy in terms of trades, as well as looking out for just about stocks which are riding on very high, a stronger degree of momentum, rather than looking at stocks which are going into a downward trend and trying to anticipate any kind of a major reversal.
Right, so that's your take, Kunal, coming in for the benchmarks. But Naresh, good morning. Good morning to you as well, Kunal. Naresh, I wanted to understand, if you see yesterday's trading session, you had the broader markets that managed to actually see a sharper and swifter recovery when you compare it to the benchmark indices. While we were languishing with cuts about 1% or so, you had broader markets that actually were near that positive territory. Do you think that's the trend that we have to work around with, where you will have the broader markets outperform the large caps?
So that's been the trend for the last many months. If you look at overall on a 1 month or a 3 month or a 6 month basis, the broader markets have done well. And now, even if you look at the Nifty today, we are at say 23,900 levels. The low is 23,200. So barely 3-4% up from the lows. But if you look at the small cap index, it's up 6-8% or more even from the lows. They've barely corrected, went up and made a new all-time high. So overall, the bias remains. Unless we start breaking 23,200, that's the price. That's the time where we'll see pressure on the small caps. Till the time we are in this band of 23,200 to 24,800, and without any breakdown, I would expect small caps and mid caps to do better than the index.